Alright everyone, thank you guys for being here. We're going to go ahead and get started with our guest lecture. I know it's a Saturday morning, but we really appreciate you guys being here. And our agenda for today is we're going to start off with a guest lecture from Mr. Matt Anderson, and then after that we're going to transition into a fundraiser that we're hosting, which does have a cash prize. So to introduce our guest lecturer, Matt Anderson is a regional managing director within Wells Fargo's legal specialty group. He is based in Texas, and his team covers the Southwest and Midwest regions. The legal specialty group services the financial needs of both law firms and attorneys. Their sole focus on the legal industry allows them to tailor solutions to the unique needs of the legal profession. Matt has been part of Wells Fargo and predecessor banks since 1999. During that time, he has held leadership positions in wealth management, commercial banking, and retail banking. Matt earned a Bachelor of Science degree in Business Management from North Carolina State University and an MBA from Wake Forest University. Matt holds Series 7 and 66 licenses. Matt lives in the suburbs of Dallas, Texas, with his wife and 2 sons, and spends most of his free time watching his 2 younger sons, ages 17 and 15, play a variety of sports. Matt also has an older son who is a freshman at the University of Georgia. Matt enjoys volunteering at local Habitat for Humanity and Special Olympics events. So please give us a warm welcome for Mr. Matt Anderson.
Thanks for having me. And the suburb of Texas is Frisco. I'm actually neighbors with Charlie. So I moved here about 10 years ago from North Carolina. And had the privilege of moving next door into Mr. Goldberg, and Charlie got to know them and their family over the years. So what I thought I'd do, again, he covered my bio, but I thought I'd just give you a quick overview about me, and then we'll jump into banking. Again, I grew up in North Carolina, again, ACC schools, North Carolina State for undergrad, go Wolfpack for those who are watching basketball the last few weeks, and Wake Forest for an MBA. Work experience, I started my career in 1999 at a bank called First Union Bank in Charlotte, which was kind of a super regional bank at the time. I was recruited out of college into their management training program, which was a super cool way to kind of enter into banking. It was a 6-month sort of job rotation around the bank. First Union and Wachovia merged in 2001. We kept Wachovia's name, and then during the financial crisis, if anyone wants to talk about that, we can. In 2008, Wachovia and Wells Fargo merged, and I've been at Wells Fargo ever since. So think of it as one bank, 3 names. That's sort of my career. So close to 25 years in the banking industry. Again, I'll kind of jump into banking, give you kind of a general overview of banking, and then what I thought was probably most relevant for this group is kind of talk about the various lines of business that are available in banking, and then what sort of jobs are in those lines of business. I figure that may be most relevant for you guys as you're thinking about your careers down the line, and if banking is an avenue, I can maybe cover a couple things that may be of interest up to you. So let's talk about first off, how do banks make money? And interestingly, JP Morgan, the largest bank in the country, just released first quarter earnings on Friday. So did my bank, Wells Fargo. So the big banks in particular, they generate a lot of revenue. JP Morgan had $41.9 billion in Q1 revenue, just for 1 quarter. Wells Fargo had $20.1 billion in revenue for the first quarter. How do they do that? How do they make money? The primary way banks make money, it's a very simple way, that's called net interest income, the net interest margin. So let me give you kind of a simple example of that. Let's say Charlie has been trading stocks and he's like, you know what, I'm just gonna cash out of the market. I'm not real comfortable with the market right now, I'm just gonna sit on my cash. So he's generated $1 million in trading profit. He's like, you know what, I'm gonna sit on the sidelines. So he goes around and tries to figure out what bank am I gonna park this money at. Bank comes along and says, hey, I'm gonna offer you 4% in interest on those deposits. Charlie's like, okay, I like that deal. I'm just gonna park my 4%, my $1 million at the bank and earn 4% interest on that. The next day I come along and I'm like, you know what, I need a mortgage. And so we're shopping for houses. I need $1 million mortgage, okay? So banks can take those deposits that they gather from Charlie and everyone else, and they can actually lend out a portion of those deposits as loans, okay? I come along, I get my $1 million mortgage, they're gonna charge me 7%. I was looking, mortgage rates around 7% right now. I'm gonna get charged 7%. The bank is making the spread between the 7% I'm paying on that mortgage and the 4% that I'm paying Charlie to hold those deposits. That's spread. That's 3% margin, net interest margin. Think about $1 million, that's $30,000. So you extrapolate that times tens of billions of deposits, tens of billions of loans. That's how you generate in the billions of dollars in quarterly revenue that big banks can generate. Other ways, fee income. When I go to close on my house, that $1 million mortgage, I'm gonna have to wire money to the title company. Going to the bank, they're gonna charge me 15, 20, 30 bucks to send that wire to the title company. Again, take that across millions of customers across the country, it's a lot of fee income that banks can generate. If I own a company and I gotta make payroll to pay all my employees, I got ACH fees and things like that to make those payments. So again, lots of different ways to generate fee income. Card interchange fees. So when you go to Target and you swipe your card, let's say you spend $100 at Target. Well, banks offer credit cards to individuals, right? So when you swipe your card, actually Target is paying an interchange fee to Visa and MasterCard, and then they share that revenue back with us. So that 3.5% of that $100 actually goes to Visa and MasterCard. And Target pays that, not you, Target pays that for the acceptance of that card. And then they share that revenue back with the bank. That's also how we fund all the reward programs that you get with your credit cards, 1% cash back, things like that. Investment management fees. So I'll keep you, Charlie, I'm gonna use you a lot, so if you don't mind. Let's say now Charlie's like, you know what, I got that $1 million at the bank. Actually, I wanna go back into the market, but I don't have time to manage that money myself. I just wanna hand that over to someone to manage. So he might hire an investment advisor. Take his $1 million, hand it to them. They're gonna charge him, let's say 1% to manage that money, to come up with an investment plan. So, 1% on $1 million, that's $10,000. Again, more ways banks can generate fee revenue. And then capital market fees, we'll get into more of this later. But large companies, they go public, they issue debts, they do, they merge with another company. They hire banks to help them facilitate those type of transactions. And that, again, banks are gonna charge fees to help facilitate those type deals. That's in the capital market space. So again, lots of different ways banks make money. Banks vary by size and complexity. So there's no right or wrong answer. So if you're thinking about a career in banking, there's no right or wrong answer whether you go to a small bank, big bank. Big banks are just gonna be more complex, they're more highly regulated. They're gonna do bigger deals. That can be good, that can be bad, depending on your view. Small banks are going to cater to the local community. That could be great. If you drive an hour any direction from Dallas, you're gonna start entering farmland. Well, guess what? The banks in that area are probably gonna cater to those ranchers. They may do agricultural loans, they may do cattle loans. You're not gonna find that at Wells Fargo. We're not focused on that. But those banks are, again, that's great for those local banks. There are over 4,000 commercial banks in the US. So again, a wide variety of banks. But my experience has always been on the large money center bank side. So I listed a few examples, JP Morgan, Bank of America, Wells Fargo. I mean, again, these banks have become huge, over $1 trillion in assets at each of those banks. So again, lots of complexity with the large banks and highly regulated. And I'll get to kind of what that means in terms of jobs here in a minute. And feel free, I know we got Q&A later, but if I bypass something, you have a question, certainly feel free to ask. So now I'm going to jump into the various lines of business, kind of talk about the various products and services that are available, talk about the kinds of jobs that are available in these lines of business, pros and cons, that kind of thing. So retail banking. This is going to be targeted for the mass market consumer that's out there. Okay, these are going to be the very simple banking products, checking accounts, savings accounts, debit cards, mortgages, auto loans, all facilitated by branch networks. You may think to yourself, why on earth today, who goes into a branch? Shockingly, branches are still a very integral part of a bank's connection to a local community. If you're a business owner and you need a loan, you're probably gonna walk into a branch and say, hey, I need a loan to open my next restaurant or whatever it may be. But more and more, this part of the segment is being digitized through mobile banking. I mean, it's amazing what you can do from your phone. As many of you probably have already starting to set up your own checking accounts. I mean, you can do virtually everything from your phone. Again, that's going to service a lot of these customers. The types of jobs, I mean, branch bankers, even tellers for very entry-level folks, loan officers, so they're going to make those mortgages. They're going to open home equity lines of credit for folks who need to get access to personal capital. Here's what I'd say from a job perspective. The good thing for these types of jobs, very easy to get one. Any of you, even when you graduate high school, could walk into a bank and get a job as a teller or even a branch banker likely. I don't think most of them even require college degrees at this point. It's a low barrier of entry. The other thing I would say, particularly as you graduate college, if you go into kind of this branch network, quick advancement for those who are good. If you are interested in managing people early in your career, you will go, you advance very quickly in the branch network, or call center, or whatever it may be. I have a couple of folks on my team at the bank who at 26 were managing 10, 15 retail branches. So they were managing hundreds of people at that point and very early in their career. So again, that could be of interest for some of you. I'd say that the downside of these type roles, again, they're more entry level, right? So lower compensation on the starting in, but again, you can advance quickly if you want, but lower compensation to start. And I'd say the one challenge is lots of turnover. So if you manage a branch or you manage call centers or things like that on behalf of the branch, you're just gonna get a lot of turnover among your people. It's just the nature of the business. Good, it's lower pay, you're gonna get a lot of change. And that's tough to manage. You're constantly recruiting and backfilling people. Okay? Let's go into commercial banking. This is a very interesting part of banking. I mean, you think about how many businesses there are just in Frisco, right? Roofers, restaurants, commercial real estate. There's just any type of business you can think of. There's endless examples. You've got from the local pizza owner all the way up to Walmart, right? I mean, it's just massive amounts of different types of companies that are out there. So these businesses, they need access to capital. So they're gonna go to banks and say, hey, I need a commercial loan to help me open my next store or open what, I wanna advance into Oklahoma. I've sort of saturated Texas, I'm ready to move on to the next state. So they come to us for commercial credit. They're also coming to us for treasury management. And what I mean by that is, think about Walmart, right? They have over 4,000 store locations. They don't need loans. Walmart's got plenty of money, but they got 4,000 stores, and each of those stores have cash registers. Think about all the physical cash they're moving around, okay? They contract that out with banks. Banks will show up with armored trucks, deliver cash, pick up cash. They're gonna pay a bank to do those types of services. AT&T, you go to make your bill pay, right? You go and you pay your AT&T bill. You're doing that online. There's actually a bank on the back end that's actually processing those transactions. You're not doing that directly. It looks like you're paying AT&T directly. You're actually paying them through a bank. So like all that technology wiring that you're doing that through AT&T is done through us as a bank. Again, we're going to charge fees for that to process those payments. In terms of the types of jobs, again, commercial bankers, so they need relationship managers to go talk to all these businesses. Sit down with the business owner. Hey, what do you need? How can we help? What's the next product or service we can sell you? Oh, you need a loan. Let's get my underwriter involved. Because they're going to look at those loans and say, give us all your financials. We're going to analyze those financials, figure out, hey, does this person qualify for a loan? Can the business stand alone by, can we lend the money directly to the business? Or do we need the person actually personally sponsor that loan, personally guarantee that loan? All those type of questions are going to be answered by the underwriter who's going to underwrite those loans. It's a very highly competitive business because every bank, all the 4,000 banks that I mentioned in the beginning, they're all going after these commercial clients. These are from a bank perspective, can be very lucrative relationships because businesses grow over time. There's lots lots of opportunity to lend to them. So it's a great business, and you can, when you think about, how you're thinking about your career, you can go very deep. You can focus just on retail customers. I'm just going to focus on restaurateurs, or I'm just going to focus on, commercial real estate developers. You can really build an expertise in this space. Okay. So now let's talk about investment banking, and I'll kind of go back to the single shop pizza owner, right? And they come to us and they've gotten along, they've expanded. Let's fast forward 10 years now. Pizza owner now is in 500 locations, and he or she is doing a great job. And Pizza Hut and Domino's is like, this company's killing us. They're taking market share. Pizza Hut's going to show up to that pizza owner and say, hey, how about we buy you out? How about we merge? So that business owner is now faced with a decision. Do I merge with Pizza Hut? Do I go public? Do I say, no thanks, Pizza Hut? Maybe I go public and I list my shares on the stock exchange. That way the business owner can take out a little liquidity and then trade nationally, raise capital. Or maybe they're just like, you know what, I don't want to do any of those things. I'm so big now, I want to take out $1 billion of debt through a bond offering and actually go from 500 to 1,000 stores, just keep growing. All of those type decisions are going to be facilitated through investment banking. Now we're talking about, we've gone from a mid-sized company to very large company. We're talking about publicly traded companies who've kind of outgrown the need for a commercial loan. Now we're talking about more sophisticated needs. Now we're in investment banking, okay? Whether you're doing an M&A decision with Pizza Hut, whether you're gonna go public, whether you're gonna just maybe do a debt raise through a bond offering, all that's facilitated through investment banking. This is a great business. When you think about the size of deals that you're doing, they're highly lucrative. When you think about you're doing like a $10 billion M&A deal, they don't blink an eye at spending $50 million with their investment bank, in fees, because that's a drop in the bucket to a transaction of that size. This has a very high barrier of entry, though. I'd say the cons would be banks are recruiting the best of the best. Now, looking around this room, all of you would be well poised to look at jobs in this. They're looking at the best business schools and hiring the very brightest folks to kind of enter into this. This is a very structured program too. Again, kind of getting into the job aspects of this. Very structured. So they're going to recruit you either out of undergrad. Again, they're looking at the best schools, so they're going to recruit you out of B school. You're going to come in as an analyst. You're going to work 80 hours a week. You're going to have a terrible work-life balance, just to be honest. Then you're going to move into an associate role, which is going to give you a little more responsibility, and you're going to move on into managing director and upper levels. But this is an exciting industry. My nephew lives in Manhattan, lives in this world. Works at UBS and went through the same analyst associate program, but he works 7 days a week, and that's just what you have to understand getting into it. I'll jump ahead to a funny cartoon that I sent him over text, but you probably can't read it. And it says what attracts you into investment banking with a giant dollar sign in the background. So that's again, it's an interesting work, and for those who are very interested in analyzing companies, doing the analysis, you're going to be knee deep in Excel spreadsheets in the early part of your career, analyzing discounting cash flow. A lot of things that I know that you guys are kind of studying now. Investment banking is an interesting career.
Hey, Matt.
Yeah.
Matt, you opened up the opportunity.
Yeah, fire away.
How connected are the three different branches that you've talked about so far?
Yeah.
With each other when you're talking about career mobility and advancement?
Oh yeah. Yeah, they're all very interconnected. Okay, and so the banks do that on purpose, right? Because you'll have high net worth individuals walking into a branch. They want to make sure, hey, we're referring that to the right person. Or folks who have kind of carved out their niche of hey, I'm actually working with a lot of high net worth people in the branch. Now I'm going to move into wealth management, etc. Same with commercial banking. They got to be super connected to pass that client, hey, this client's outgrown me. They're now kind of moving into the investment banking line of business. So it's all interconnected. And from a career standpoint, they're looking for employees who've built that experience and ready to move on to maybe the next role. So it's very interconnected.
So with this investment banking, you know how Green Bay has their own share owners with they have the shares with their people?
Sure.
Would this be the same thing as like the IPOs and stock trading?
Yeah, so that's an interesting one. Atlanta Braves did that as well. They kind of have their own. They went public. It doesn't trade like a normal stock does. But yeah, they went out and did a public raise with capital. That's exactly.
And so would someone like an analyst or associate, they're the ones who manage all that?
They're the ones who are going to do all the analysis on the front end before they went public. And so they're gonna look at that and go, hey, we think this will price out. Let's say we think we're going to raise $2 billion in capital. So that equates to what I'm making up this up $30 a share. So they're doing all that analysis of what they think can clear the market, and then they go public, right, at $30 a share. They do the roadshow. It's in investment banking before a company goes public. Again, we'll use sort of the pizza example. Before that company goes public, they're going to go do a roadshow with all investors that are sitting on a lot of cash, the Vanguards of the world, saying, hey, we got this company that's going public. We think it's really an interesting investment idea. Are you in? How much would you be willing to invest? And that way, when that company goes public, they are ensured that there's capital that are going to buy those shares that get listed on the exchange. Okay. Let's go to the last line of business that I'll talk about, and that's wealth management. I'll keep using this pizza analogy. Let's say the business owner decides, you know what, I'm just going to sell. I'm going to sell to Pizza Hut. I'm going to exit. Sold it to Pizza Hut or Domino's or whomever. I've now cleared. I'll just make up a number. Free and clear after tax. I've made $100 million. Gosh, what do I do now? It's a good place to be, right? I'm going to likely hire an investment advisor. And again, I'm making up big numbers, but this could be a small number. This could be $500,000, $1 million. I'm going to hire an investment advisor to sit down with me or sit down with my family and figure out, what do I want to do now that I have all this wealth? Do I want to give it away? Do I want to create generational wealth for my family? What's my plan? So they'll sit down, put a plan in place, build an investment portfolio based on what do you want to do? Do you want to get aggressive and try to turn that $100 million into 200, or you just protect my principal? Maybe I just want a basic fixed income portfolio. Again, you're going to hire someone to do that, financial advisor, investment specialist, whatever they may be called at the various banks. We have financial planners on staff that do nothing but just kind of come up with your plan before you invest the money. We also have insurance specialists who will help, kind of round out your portfolio. So lots of jobs available in this world. So if you're interested in working with individuals, if that's of interest to you, interested in the market itself, this is a great path, the financial advisor world. And I work with the financial advisors all day, every day in what I do. Which again, you have to wake up in the morning and be interested in working with individuals, understanding what are their goals and objectives with their wealth. I would say the downside in this type of role is not every financial advisor makes it. These are 100% commission roles. So you're going to get paid based on the assets under management that you're bringing into the firm. If you're not good at that, or you struggle with bringing in those assets, you're not going to get paid. So you have some people who say, you know what, this job's not for me. But this is a great business as well. And honestly, I'd say it's unlimited compensation, but in many respects, it is unlimited compensation because it's just you're getting paid based on the AUM, the assets under management that you bring into your brokerage firm. Okay, let me talk a little bit more about other banking roles that are out there. So, one of the pieces of career advice I got early in my career was stay close to the money, stay close to where the money's being generated, and that really talks about the lines of business. Each of those various lines of business generate revenue. But there's a ton of other roles that are available inside of banks, particularly large banks. Marketing, banks do TV, radio, newspaper, magazine, all those types of advertising. We do events. All that is supported by a pretty large marketing staff. I'm going to the Wells Fargo Championship in a few weeks. You know, our marketing team is all over that. What clients are you bringing? You know, all those type of things. How are we distributing tickets? All that's supported by marketing. Human resources. My bank has 250,000 employees. I mean, the HR apparatus to support that is huge, whether it be training, recruiting, just dealing with day-to-day HR stuff. Again, if you're interested in that, we have huge HR departments and banks. IT and technology. Again, going back to the idea of just how banking is becoming so digitized, tens of thousands of technologists at our bank supporting the IT infrastructure of and you think about, we're protecting billions, if not trillions of dollars in money. The technology needs is amazing. And in fact, JP Morgan came out the other day, this kind of speaks to the risk management side of the business too. Jimmy Downey came out and said they get 45 billion hacking attempts per day. So the infrastructure you need to protect the bank against something like that is, I mean, they're literally spending billions of dollars to protect the bank against hacking attempts. And I'll let a lot of that's gonna be AI driven. It's not someone actually trying to hack. They're building programs just constantly trying to hack into banks. So again, lots of interest in technology. Artificial intelligence too. I mean, you can't talk about business today without AI. So banks are now employing AI in very different ways. We now have artificial intelligence helping us build investment portfolios. Instead, you may not want to hire a person now. You may want to hire a robot to say, hey, here's my risk profile, and have AI kind of help you construct a portfolio. It's cheaper. They're not swayed by emotion in markets. I mean, there's some interesting, kind of thoughts around that. Compliance and risk management too. Again, risk management, this is a highly regulated industry. The government has a lot of regulations around banking, rightfully so. I mean, banks are kind of the lifeblood of the economy in terms of keeping the economy going, so we cannot have banks failing. That's very bad for the economy. So again, lots of regulations ensuring that banks are behaving, they have certain levels of capital to absorb credit losses, things like that. Morgan Stanley was in the news just this morning or yesterday. They're under some scrutiny right now because they're claiming they weren't monitoring money laundering as appropriately as they should be. There's something you'll hear about called KYC, know your customer in banking. Banks have to know who they're dealing with. You cannot have a Russian oligarch sending billions of dollars through your bank. That's a problem, and so we got to make sure that we're flagging those types of things in banks if someone is already sanctioned by the EU, by the U.S. government. We got to make sure we have controls in place. So again, compliance and risk management is probably one of the biggest growth areas in banking as well, because again, it's so highly regulated. Okay, let's see. Oh, I have some career advice here. So just a couple things I'll mention. I can't emphasize how important being in the room like this is with your peers. Networking is, I can't emphasize how critical it is to how being successful in your career, okay? Have a LinkedIn account, whether it's maybe not today, or I'd say by the time you graduate from high school, have a LinkedIn account. It's where us old nerds like Mr. Goldberg and I hang out on social media. I don't do anything really with LinkedIn, but I have probably 1,500 connections, and I, maybe more, and I'll lean on those connections if I need them. But just make sure you're networking. It's in many respects, it is still who you know, not what you know. And again, down the line, you may need to know what so-and-so is doing, and just, hey, do you know, I saw this person's connected to you. Do you know them? Oh, you do? Can I get an introduction? That'd be super helpful. It's very important. And so continue that as you move on to college. I'm seeing this now with my son in Georgia, tons of clubs and networks. Stay involved in all those, okay? When I say be bold, push yourself, make yourself a little uncomfortable at times. Take that public speaking gig, or take that, vice president role in this club that requires you to do X, X, Y, and Z. Push yourself to be out there. I always say, be paranoid of failure, but don't fear it. That's sort of the motto that I've had. It's okay to be paranoid, but don't fear failure. Just go out there and push yourself. And then the last thing, you can't start too early in educating yourself. And again, this is a very astute group already, but do your reading. Find some books of interest. I personally read the Wall Street Journal every day. Again, as you're starting to have conversations, whether it be for internships or that first job, having a sense for kind of what's going on in the world. Oh, I read about that in the journal, the New York Times, or whatever. Just staying on top of current events, staying on top of the markets. If you have an interest in sort of this world, I think would behoove all of you to do so. Anyways, just a couple things there. That's all I have.
All right. Does anybody have any questions for Ms. Anderson, Mr. Anderson? Or,
Yeah.
How many investment bankers were in the bank?
How many investment bankers? So it's going to depend, obviously, on the bank. But so the largest investment banks out there are going to be J.P. Morgan, Citibank, Morgan Stanley, Goldman Sachs. I can't give you an exact number, but it's a large number. I mean, it's probably in the tens of thousands, at a bank of that size. But I don't know how many analysts they're bringing in each year. It's very competitive, though. That's what I would say. So one of the keys to getting into an analyst role at a Goldman Sachs or JP Morgan is getting the internship while you're in college. Okay, I'll give you my nephew's example. So when he was a junior, in between I think his junior and senior year, he interned. It was at Credit Suisse at the time. They've now merged with UPS. He did a summer internship, and he was Excel. He just was given Excel spreadsheets and said, "Hey, crank out a bunch of analysis." He did that all summer, worked long hours. Then at the end of his summer internship, they kind of indicated to him he would get a job offer if he was interested in coming back to them. That's what he did.
any other questions?
What book out of all the ones that you listed would you recommend if you really want to get into investment banking?
Investment banking. I don't know if any of these would sort of jump out in terms of investment banking. Some of these are kind of fun reads, to be honest with you. Too Big to Fail is a good one. I mean, The Big Short is fascinating, but that's really not so much investment banking. That's more of a very sophisticated trading position that he took on sort of betting on the downfall of the mortgage during the mortgage crisis. I'd say of these, investment banking would be more so Barbarians at the Gate. That's about R.J. Reynolds and private equity firms kind of coming together. But there's lots of them out there, so I don't have a good answer for you. But there's lots of good investment banking folks out there.
On that same theme,
Yeah.
who are people or leaders in the industry that you follow
Yeah.
that you think are market movers with their views on the industry or the economy and how things are going?
Yeah.
Who do you pay attention to?
Yeah, so it's interesting. A lot of the CEOs now are kind of coming out with their annual letters. Warren Buffett is the one that's historically known for releasing his annual letter that's widely read. And that's an easy one, right? Everyone reads Berkshire's annual letter. Jamie Dimon now, JP Morgan's CEO, he just released his annual letter. He's certainly a market mover. Let's see, who else? In Goldman Sachs, I would say look at the CEOs of the top firms. David Solomon at Goldman Sachs would be another one to follow. Those are a couple of Jeremy that come to mind in terms of who I pay attention to.
Any other questions?
Yeah.
So are there any sort of lifestyle differences between working on a place like Wall Street or in New York City versus working in Dallas or some sort of smaller city?
Yeah, in terms of work life.
Yeah,
kind of
work
thing.
life, things
Yeah.
like that.
So the culture in New York is one, particularly in the investment banking world. I think it's changed a little bit. I'm not an expert on this, but I have a little experience just through family and friends. I would say it's a difficult couple of years of your life, you know, to be honest with you. The investment banking world, I mean, again, my experience with a couple of friends who went down that track and then seeing my nephew, it's a get in at 8 in the morning and you're having dinner at work. I mean, you're there, you know, to midnight some nights, and it's a 7-day-a-week kind of gig. So you're definitely giving up a little bit of your work-life balance. Look, it's true in other industries too. I work a lot in the legal industry, so large law firms. By the way, large law firms are heavily involved in these deals too. You hire an investment banker and you hire a law firm, attorneys to work on these deals. The first year, second year associates at a law firm, same thing. They're working long hours at all times. So I think you have to just understand that going in. For some people, that's doable because you know it's not forever. For others, you know, it's just like there's no money worth your time. You know, so others have a different view on it. But I would go into it eyes wide open in terms of, you know, kind of what it's going to entail. And I think again, if you do the internship like I was talking about, you'll get a sense for that early on.
Man, if I could stack on that question.
Yeah.
Is there a difference, or positively or negatively, by being located in New York or the major financial capitals versus maybe Charlotte, which is a regional financial capital, or Chicago, or even Los Angeles? Like,
Yeah.
geographically, is there an impact of where you start your career?
I think their geographic boundaries are coming down a little bit. I mean, Charlotte has its own trading. Well, we have a trading floor in Charlotte, you know, Wells Fargo. Dallas is known for having like more private equity firms, okay, that kind of raise capital and go out and buy companies and things like that. Again, for early analysts in a private equity firm, it's a very similar situation as an investment bank. You're going to work long hours, but you're not in New York City either. You know, New York is still the global capital. I mean, make no mistake. That's where J.P. Morgan and Goldman Sachs and Morgan Stanley have most of their analysts. Goldman Sachs is building out a huge facility here in Dallas, but that's going to be more their back office, more their operational side of their business. It's not where they're going to have their analysts and associates. I don't know if I answered your question, but
I mean, I was talking a little bit more about like the cultures. Like I've heard it's like a little bit more cutthroat when you're in New York because you're surrounded by so many competitive people all at the same time.
I think that's true too. I think that's right. It's a very, again, just having talked a lot with my nephew who's living it right now, even the internships are kind of cutthroat.
Mm-hmm.
It's a lot of competition just to get in the door of those places. So I think that's right.
Well, depending on what kind of lifestyle you want, like, if you're gonna be in Dallas, it's gonna not be as, like, 15-hour days or something.
Yeah.
You know, it's not gonna make or break you, but
Mhm.
there's huge firms all in DFW and Houston, because, you know, obviously we're one of the bigger cities in the world, or in the US, so like, I wouldn't not going to DFW or Houston to do any of your stuff too.
Absolutely. And look, I don't want to come across as negative either. I mean, these are great. Investment banking is a great avenue. It really is. It's lots of opportunity to make money, work on really high profile type deals. It's fascinating, to be honest. I'm just trying to highlight some of the challenges too.
Sorry to keep asking questions, but I think this one's appropriate for the audience in the room today. You mentioned B school a few times.
Sure.
Would you advise, or do you think the majority of what you determine to be successful industry players today move on to get their MBAs like you, right? Do you think that's a requirement to be able to be successful or competitive in this space? And secondarily, is undergrad, the big, well-known, competitive undergrad programs, an essential part of that path? Or is it more the MBA program if you determine that MBA is essential?
Yeah, I think everyone in the room should know that. Of course, it's great to get into an Ivy League school and all that, but that that is absolutely not a requirement at all. At all. In fact, my nephew, again, I keep using him as an example, he graduated from the University of South Carolina. He was honors school, and now he's working on Wall Street and doing great. And South Carolina's a great school, but it's not Harvard, right? So, I think the key for all of you is whatever school you choose, is once you get there, get involved. Network with everyone you can, whether it be alumni, whether it be your professors, whether it be the other kids on campus, the clubs and other things, is network. If your parent, if one of your parents is friends with the CFO of whatever company, ask for a cup of coffee with that person, or lunch, or whatever. They'll love to tell you about what they do. Again, those types of little connections, if you do that constantly, that adds up. And then you'll be shocked at the kinds of opportunities that will present to you down the line. So that would be my encouragement. Jeremy, I think there's still a lot of debate to this day around, do you need an MBA or not? I chose to go get mine. I think for me, where I was in my career, it certainly helped. It was expensive, it took me forever to pay it off. But I think it was worth it for me. But everyone's gonna have to come up with their own sort of calculation of whether it's worth it to you or not. I look at the people who were the most successful in our bank, operating committee level, managing, tens of thousands of people. It's probably a 50-50 split, on who has one, who doesn't. So I think you just have to evaluate for yourself whether it makes sense. It did for me. For everyone's knowledge, I did mine while working. I was not in a position where I could just stop working and go to B school. I did mine on the weekends. So I did for 2 years. I did 42 weekends for 2 years straight, so 84 weekends, I guess. Got my MBA while I was working. Others, kind of stopped and go full time. I didn't have that opportunity to do that. But so there's pros and cons there. I would say though, once you get to your point, if you go to B school, that's going to kind of trump your undergrad in terms of if you can get into a nice B school. I think that's going to kind of stand out more so on your resume versus your undergrad, in my opinion. So again, my point is go to where you can go to for undergrad, but it's not the end all be all. You can always go back to B school and get that more highly classified B school if you want it. Yep.
Did your company help you facilitate the MBA process, or did you kind of do that separately?
Yeah, they did help a little bit. So there's almost all the firms now have a tuition reimbursement program. May not pay for all of it, but yeah, they helped pay for some of it. In my situation, they paid for some, but not all. Other companies will pay for all of it, which is wonderful. And if they do that, honestly, if you can do it, do it. You'd be kind of crazy not to if you're getting financial help.
Any other questions? All right, can we give Mr. Anderson one more?